So Shehan, the usual first question, what is happening in the market?
If you look at the last couple of few weeks, the activity levels have considerably lined up. If you look at the participation, retail participation has been really low, and but if you look at the value-based investments, we see net foreigners coming into the market. We see for the year to date we have about 24 billion net foreign participation, and but all in all, there's considerable selling from the retail side. Because of that, prices have been coming down, especially last for about 15 days. It has been coming down steadily. All in all, negative trend is forming up, but we see value-based investors coming up, and because of the prices are holding up, and as I mentioned, foreign investors and value-based investors are picking up on the bargain price as the market price have come down to really good valuations. Even if you look at the global markets, currently price for earnings ratio for the market is hovering around 10 times of the earnings. So it's, if you look at the overall growth prospect of the economy and looking at the valuations and the counters in the market, we see good attractive selected counters with good growth potential and good investment opportunities. Because of that, we see strong value-based investments coming into the market in the short term. But as I mentioned, in the short, retail-based selling will dry up the order books, and there will be a little bit of a selling in the market. But in the long run, we see good investments in the market.
All right. So how do you see the economic situation of the country?
After the war end, we recorded two consecutive years of 8+ growth rates, despite the fact the global arena was having so many issues with the euro issues, and even from the emerging markets, growth has not been that up to the expression. But after the war ended, Sri Lanka has recorded really good growth rates for 2010 and 2011. But saying that, the high growth rates put pressure on high imports, and the imports have increased rapidly for 2011. It almost increased by about 50%, as opposed to exports, it increased only about 20%. Because imports hit about 20 billion and exports about 13 billion. Exports about 10 billion. The trade deficit ballooned to about 9.7 billion, and it put pressure on the balance of payments as well. Balance of payments deficit incurred about balance of payment deficit about 1.1 billion, and because of there was a considerable issue on the balance of payment side of things. Because of that, the central bank put in new measures in February and March, and they wanted to curb down the imports. They increased fuel prices, and then they fuel prices, and they also increased duty for the motor vehicles, for example. Because of that, if you look at the measures taken by central bank, and if you look at the external sector results for the first quarter of the country, we see things are a little bit of stabilizing. If you look at the BOP side of things, the BOP balance of payment deficit has come down to about 251 million, as opposed to fourth quarter 2011, fourth quarter 1.1 billion balance of payment deficit. And if you look at the current account deficit, it is also has moderated considerably. It has come below 1 billion. But there's considerable volatility in the face of exchange rate, because central banks reserve rates have depleted considerably in the beginning of the year, but now it has moderated a bit. And because of the measures the government has taken to curb down the imports, and we might see a considerable inflation coming into play as well. But if you look at the growth side of things, still the long-term growth picture is intact. We believe the development measures taken by government to for concreting rural roads and building highways, this would pave way for the long-term development of the country. So if you look at the official figures for the first quarter, it is about 7.9% growth recorded for the first quarter. So we are still on track, and but as I said, there's a considerable volatility in the short term of the economy. So if we can manage to the short term volatility, I think in the long term we will see good growth prospects coming together.
So what do you think about the rupee volatility, and how do you think it will affect the macroeconomic picture?
Yeah, as I mentioned now, because the reserve levels have come down, the central bank had to stop intervening in the open market from the February, and because of that, rupee devalued considerably. It came down about 15% or something. So it has reached about 130 level per USD. But if you look at the overall macroeconomic picture, we see the FDI, and if you look at the capital inflows, we see the FDIs and the tier 2 capital for commercial banks, for instance, and even the portfolio investment of Colombo Stock Exchange are coming according to the plan. So we expect the targets to be hit for the 2012. They are considered way to go forward, but in general we are confident on the government's path for the year. So we expect the inflows to build the reserves, and from the reserve side of things, we expect the dollar rate to stabilize around 130, 135 levels going for year end. So from that aspect, I would say there would be much negativity for the Colombo Stock Exchange from the rupees front, because we expect it to be stabilized, and even the authorities are confident. We expect the dollar to stabilize around 130 level. So from the market point of view, for the foreigners, we see little downside risk. So we expect the foreigners to continue investing in the market, and in the short term, we expect the net foreign inflow to continue coming to the stock exchange.
All right. So how about the increasing inflation?
Inflation is an issue, I have to admit, because of the measures taken by government to curb down the imports, and because of the weakness in the rupee, we see considerable upward pressure on the inflation. Even for June figures, it has hit about 9.3%. So going to the year's end, we expect to have around higher single digits. Even it may touch double digit 10%. But all in all, it's a bit of a concern, and because of the inflation, we see the cost base of the country is picking up, affecting the businesses of the country, and it in turn can affect the stock market counters as well.
All right. So coming back to the Colombo Stock Exchange, Shehan, where do you think it's heading?
Now, for year to date, the stock exchange has come down by about 20%. And if you look at the all-time high at around 7,800 levels in 2011 February, now it has come down to close to about 40% drop. So if you look at the bear markets in the global arena, consider when the bubble bursts, it's in general on average it comes down by around 40% or something like that. So we are definitely not in the early stage of the bear market. We have come about 1.5 years after the prices have come down. So for the investors' point of view, the growth prospects of the economy is still intact in the long term. So for the foreigners or the value-based investors, there are maybe selected counters which are really trading at really good valuation levels. So all in all, I expect the value-based demand is to pick up, and going forward, the selected counters to perform well. We expect, like, when the short-term selling slows down considerably, and when the value-based demand pick up, the stock market to pick up, then make an upward trend in the long run. And this will be more on the selected counters with the high alphas. It will be like a alpha rally as opposed to a beta rally we have witnessed for last couple of years, where all the shares collectively went in the same direction. But we expect in the long term, in the coming future, we expect the counters which are valued at attractive levels to pick up in more gradual manner with more stable manner.
If I am to ask you lastly, what do you recommend for general investors?
It's like this. We have to admit we are in a bear rally. So if you are implementing a investment strategy on a bear rally, we need to understand. We have to go for a value-based investment sort of strategy in general. What I'm saying. So if we are going for value-based investment, we always promote our investors to invest on value-based investment in this sort of a bear negative trend. So if you look at the value investments, you should go for like there are so many counters which are trading at single-digit price earning multiples. And if you look at some of the counters are trading even below the net asset value per share. So there are good value investment based, and if you look at the dividend side of things, some counters have good dividend yields as well. So if you identify counters with high dividend yields, low price earning multiples, low price to book values, we might see a good investment prospects in the selective counters. So the thing is we can't time the bottom as such. If you when the prices the stock market is coming down, we can't exactly say when it will come down, but we can always identify good investments. And if you look at the value based principles and identify the shares, we are aiming for good investment in the long term horizon. But saying that there are other counters which are not that attractive in terms of value based investment, but which have very good return on equities, such as multinational companies. So it depends on how the investment strategy of an individual investor is. But in general, I would recommend our general investor to look for value based investment with low multiples.
Thank you very much, Shehan, for your time. It was a pleasure.
Thank you. Yeah.